thank you for visiting this Tax Plan for Wealth presentation. Wealth development isn't necessarily easy, and it becomes more difficult when we allow the taxman to have more control of our funds than we should. That's why this presentation is called the Advanced Financial Freedom Plan, because taking back control of your taxes is financial freedom. For many of us, we work very hard and diligently to do what we've been taught, put some away for later. Throughout the years, we've been taught that the most effective way to save for retirement was in our 401ks. We were given the myth that we would be in a lower tax bracket in retirement than during our working years. For a few, that might be the case, but not for my clients. They also didn't tell you about the double taxation that your retirement account distribution would cause. Yes, the double taxation. They didn't tell you that the dollar distribution from your IRA could cause 85 cents of your Social Security to also be taxed, or that it can cause a Medicare surcharge called IRMAA, so that the dollar distribution was actually causing a tax as if it was $2 being distributed. If we planned well, we've managed to save enough to provide throughout our retirement and perhaps even leave some behind to make the lives of our children and grandchildren a little easier. But the truth is that many of us will lose large percentages of our wealth through a continuous erosion of income taxes. This erosion only gets worse when retirement comes. To illustrate the severity of this erosion, I teach a simple example. I encourage you to do this at home in an Excel spreadsheet to test the math. I call it a dollar doubled. I have a separate extended presentation that talks more about tax erosion in this illustration, so I'll try to be brief here. But if I start with $1 and I double it 30 times so that $1 becomes $2, which then becomes $4, which then becomes $8, etc., after $30, that amasses to over $1 billion. However, if I take the same dollar and I double it with a 28% combined federal and state income tax removed, each time a double occurs, it erodes the growth all the way down to 11 million. So the obvious question is, how can a 28% tax consume 89% of the wealth? Well, the answer is because of lost opportunity. The tax paid over those 30 doubles is only $8 million, while the lost opportunity adds up to the remaining $980 million of loss. Each time that the tax is paid, you no longer have that money available in your account working for you to grow and double. Even after only 10 doubling periods, the difference becomes significant. Instead of $1,024, you wind up with only $226. Please check my other presentation that expands on this thought, and you'll see how extensive tax erosion is to the waste of your dollar and the waste of your money.